for Reliance Industries, but AMCs are the ones that we need to focus on as of now, and they are in focus because of a brokerage note again by Kotak Institutional Equities. And since we like to keep Vamakshi busy, she's back with all the details. Vamakshi, tell us more.
Well, absolutely. Keep an eye out on all AMC stocks today. There's a note coming in from Kotak, and it is an interesting note. They've highlighted that AMC stocks are trading at a premium valuation of almost 55 to 60% to the broader markets, and the current valuations of AMC stocks largely capture the relative differences in business performance as well as growth outlook. They also conducted some analysis of early data in terms of flows, and this early data suggests that a soft landing could be expected for small as well as mid-cap fund flows. And in fact, it also suggests that flows in the small cap category, has actually seen net outflows, while on the other hand, mid cap funds have been positive, but over here we're seeing relatively lower flows come into the mid cap space. But on the other hand, categories such as large cap, flexi cap, hybrid funds, all of these categories have seen an uptick in flows, suggesting there could be a possible shift in the preference. Now, talking about individual names, they've highlighted that the growth tailwinds is the strongest for the HDFC AMC, but they've downgraded the stock from add to reduce, and that is mainly on account of relative valuations fully capturing the outperformance. But nevertheless, they've gone ahead and raised the target price to 3,750 rupees per share, and they have also highlighted that they await better entry points for HDFC AMC. On the other hand, they've upgraded ABSL AMC from reduced to add given recent underperformance. They've maintained the target price for this counter at 500 rupees per share, and they believe that the stock trades at attractive valuations, but there is some visibility needed as far as turnaround in performance and flows in flagship categories is concerned. They've retained an add rating for Nippon, target price of 510. They have highlighted that the risk reward out here is relatively more attractive given the recent correction, strong SIP book as well as the broadening of flows across categories. And lastly, on UTI AMC, they've maintained their reduced rating. They've lowered the target price to 880 rupees per share, highlighting that this company has the weakest fund performance across 4 AMCs, resulting in outflows for the past 4 to 5 quarters. So on the back of this note, keep an eye out on all of these AMC counters.
Thank you very much for that. It's time to get back to the market.